the legacy I want to leave with my kids is that I was there all the time with them and around and coaching their teams and just like being their like biggest fan and support system for whatever they want to do. I think the legacy I want to leave is just they think I was an amazing dad who was always there for them.
All right, folks, welcome back to another episode of the High Voltage Business Builders podcast. I've got an exciting guest today. We're going to talk about churning startups and sparking that investment inferno. We're going to talk about building businesses and a story of entrepreneurial journey, Michael's success. I know we were joking about how to say his name. I'm just going to say it like this. We'll talk about this in a second, but we're going to go through, answer some questions, talk about what it is in constructing your business from startup brick by brick and startup by startup. So let's dive into how we do that today. And oh, by the way, as I've always shared before, like, comment, engage, leave a snide remark, do something, subscribe if you feel so on YouTube, if you're watching it there, or IG or whatever, and help us beat big tech by just sharing the message and getting out there and engaging. So guys, I appreciate you doing that. And Michael, welcome. Good morning.
Thank you. Thanks for having me. I appreciate it.
Yeah, awesome. Well, the chicken, I got a rooster that just won't leave me alone. His name's Carl. The girls let him go and he runs around and he seems to go by the window to my office right as I'm recording. And so it's not like I've got anything on. It's literally the chicken. I'd have to go shoot him to stop it. That's my morning. How's your morning going?
It is good. Started at 5:45. I've got 4 kids. So just the hustle and bustle of trying to get 4 kids out to school in the morning to start the day. But
I didn't realize you had 4 kids.
Yeah.
Boys and girls or?
2 of each. 8, 7, 4, and 2. Although everyone,
the household.
Yeah, the 8, 4, and 2-year-olds are coming up on birthdays. So soon will be 9, 7, 5, and 3. But
you have a very similar thing here going on. We have 4, but they're all girls. And they're all 15 turning in 10, turning 11, 15 going on 16, and all in that same, like you and your wife must have had the same.
Yes, just
I don't know,
knock it out
idea to just go for it and get over it.
Yeah, exactly. Every 2 years.
We're 4.5 years and 4 of them, so it was crazy.
Yeah,
we don't send them to school; they all homeschool. So this morning they're all getting ready to go on a field trip to the Laura Ingalls Wilder homestead, which is not far from us, for a birthday party and stuff.
Nice.
And they're heading on a school trip this morning, so I get to be on podcasts. But
yeah.
So look, we're talking about business, family. We're discovering all kinds of things like we do normally on these calls. And one of the things I think that was, interesting about bringing you on as a guest is your experience in investment startups. So why don't you give us a little bit about what that means for those who are listening?
Yeah. So a quick background, which kind of leads into that is I moved out to San Francisco in 2008 and I wanted to get into tech and startups. And part of it was just like, I felt like tech was an opportunity to scale beyond. I grew up with like entrepreneurs. My grandfather had a scrap metal business. My parents had a small business association. I dealt with a lot of small businesses, but tech, I felt like had the ability to scale in a way traditional businesses and small businesses couldn't. And so I was like enamored with getting into tech. I ended up getting lucky and ended up at a startup when it was like 25 people that then went on to be a public company called Box. Went to another startup we grew to like 24 million in revenue, but not as successful, kind of plateaued from there. I was fascinated with the idea of like working at startups. I was like, oh, how do I get involved in more startups? And like, can I invest some money? And so I started doing angel investing in a few different companies. And again, like fortunate in that like the first 2 companies I put a personal check into were starting to grow kind of up and to the right, like raising follow-on rounds from other investors. And I got this false sense of I knew what I was doing when I clearly had no idea what I was doing. But I was like, I'm gonna leverage this luck and like this false sense of confidence to try to start my own fund. And I wanted to start a fund in a way where I could be both investing in companies, but also working with them like operationally, because I just really enjoyed the operation, like working at startups and like really rolling up my sleeves and figuring out like the go to market and how do you scale this and all that kind of stuff. And so I initially started it, May will be 10 years, as an accelerator focused on software selling into businesses. And an accelerator model means like a high volume of investments, small check size, but then you're like kind of an extension of the founding team and you help them go from idea or early version of a product to early revenue and help them then raise a bigger round afterwards. And so I launched it initially as that. It was just me for the first couple of years, like certainly a lot of points along the way where it almost didn't work and had to get a part-time job along the way and a bunch of different things that happened along the way. Certainly wasn't up and to the right, but fast forward now almost 10 years, we're on our 5th accelerator fund. We've invested in 450 companies through the accelerator. We then launched a seed fund. and that we're now investing out of our second seed fund, which kind of allows us to write bigger checks into the companies that start to break out from the accelerator. And then about a year ago, we launched what's called a venture studio. So we have 31 people full-time. 11 of them are just like engineers, product designers, building companies from scratch. So we've started 5 companies to date. We have 2 more that are starting, where we're literally like coming up with ideas, finding a CEO to come in and co-build a company with from the beginning, like incorporating it, building out all the design and everything, all software companies. So that's where we're at today. Happy to go into more detail on some
Well,
of
yeah,
that,
let's unpack some of that. That's a lot. That's a lot in a short time frame. You don't look like you're 65 years old, although you probably have 65 years of experience under your belt now.
No, I don't know. I feel like my kids have aged me a lot over the last 10 years.
It should both make you feel young and old.
Yes.
Depends upon the day or maybe the week.
Yes.
Yeah, kid at heart, right?
Yeah.
But if I heard correctly, I'll summarize in my simple terms, so forgive me, but it's kind of like a Y Combinator or an incubator.
Yep.
Products and brands and ideas that you're putting together with operators you're bringing in and or training if they don't have the skill set to build out these products and business types that you're targeting. Is that a fair way of saying that?
Yeah. So similar to Y Combinator, the accelerator is that. It's a founding team, initial version of a product. It's usually people who have like first-time founder, like they've never been a tech founder. Maybe they've started a service business, or maybe they've got a lot of experience in a specific industry and they noticed a problem and they're building software to help solve that problem for the industry that they know really well, but they've never built a tech company before. So they want that additional kind of support system around them to help them think through like go-to-market strategies, how do you fundraise from VCs, like all the different kind of things that we do for the companies. So that's our accelerator product. Obviously, we then layered in this like venture studio to start companies from scratch, and the more traditional kind of seed fund, which just invests in companies a little bit later stage with larger checks. So the accelerator is like $100K initial check. And then out of the seed fund, we write like $500K checks.
So to get that $100K investment, they have to have something already moving, some potential revenue already building, and maybe a unique enough idea to kind of meet the qualifications, I assume?
Yeah, we'll go anywhere from, we have gone as early as idea stage if we think the founder is like really great founder market fit. Most of the companies, I would say the average stage is like some early version of a product, and they may or may not have some early customers, but at least like they've kind of done some customer validation. They've got a pipeline growing. They've got like an early MVP version of a product, so that we can kind of then come in and help them think through how to go from like 0 to 1.
What kind of startups are you seeing a lot lately that you are investing in heavily?
We do a lot of stuff around our core kind of verticals. We do a lot in like health tech, a lot of like supply chain logistics startups. So people building software in and around that space, a lot of vertical software in like niche industries, a lot of, we call kind of applied AI, but really like almost every software product has AI in it now. Obviously that's a big buzzword. I mean, at the end of the day, like software needs to solve a problem, and a lot of these businesses are figuring out how to layer AI into the product to make them better and more efficient at solving that problem. But we do a lot of vertical software in all different kinds of industries.
I need to introduce you to Dr. Bakari. Bakari? I think I said that wrong. I'm going to say it wrong. Forgive me if you're listening to this, doctor. But I need to make a connection between the two of you, as he's got an e-tech health startup that you should actually talk about.
Awesome. Sounds good.
Yeah. It's just, I mean, and that's the way that business really at the end of the day is done, is on networking connections with. So those of you who are listening to this, if you have a startup and you have an idea and you have something that's in motion and you've got some kind of prototype or early stage development underway, this might be for you, because you guys were here listening about people who are building businesses and having opportunities. And of course, it sounds like it's all just paved with gold streets, Michael, but where's been the gotcha? Where was that moment when you realized, okay, I was having luck with a few of my startup ventures that I put checks in, and then what happened? Because you skipped over the part that sounded like you might have ran into some trouble there.
Yeah. So the first fund I raised was in 2014. It took 18 months. I was consulting on the side to pay the bills while I was raising it. I had no business raising a fund. I had no track record, really. What I had was a network that I had met through the startups I was at, and was able to convince enough kind of senior execs who had worked with me to bet on me, really. And so I ended up raising a small fund. I could barely pay myself. And what I don't think I like fully comprehended or was a bit naive around was like, when you invest in startups that early, on average, it might take 7, 8, 9 years to get to like a liquidity event. And so it takes a long time to, one, realize if you're any good at it, and two, like get the upside from it. Like it's called, we raise funds from LPs, and then we have to return capital, and we get what's called carried interest if we generate profit for them. And like my wife always used to joke with me of like, where's this like mythical carry you keep talking about? Like, is this ever going to come? Like, what is happening here? And so, that was the initial side of it. And then at some point, my wife and I wanted to move back to the East Coast to be near family because she was pregnant with our second. And I had to hire someone senior in San Francisco because San Francisco was still like the epicenter of all this. And I couldn't afford to pay someone senior in San Francisco and pay myself a salary at the time. So I ended up getting a part-time job for a little bit. And then I went back. That lasted about 6 months. And I went back to doing this full time. And I was blowing through savings. We just bought a house. We had our second kid. And I was like starting to run out of like personal runway on doing this. Yeah. And it wasn't clear it was going to work. We had raised the second fund, but it wasn't very big. And I went to one of my my biggest investor. And I said like, hey, look, I think I need to get a part-time job here again. Like, I just can't, I'm running through my savings. Like, can't afford to keep doing this. And he was like, how much is it going to take for you to not do that? Because this is going to work. And so I gave him a number and he was like, I will buy that much of your future carry at some agreed upon price to give you the cash flow now. So you don't do that. Don't get distracted. Like, stay head down and focus on this. This is going to work. And then someday if it works, like you can buy this back from me at some interest rate so that you can still capture the upside. And I'm still like very grateful to him for that because it like allowed me to stay focused. If I had gotten another part-time job, like, I don't know, it would have been hard to really kind of build this out the way we ended up building it out. And he's still a big investor in all of our funds today. I was able to pay him back like 3 or 4 years later. But yeah, it took a lot of like just finding believers, like people who believed in me and the business, maybe even more than I did at the time, frankly.
Sounds like it. I mean, it sounds like he had faith in the process a little more. And that's where mentoring and leadership of others comes in. Yeah. At the end of the day, he saw something maybe in you didn't see in yourself at that moment. And clearly it's been realized in the process, which is where I think the coaching and mentoring aspect is kind of underrated in the world. Yeah. People don't necessarily appreciate it as much as they probably should.
Yeah. I've had a bunch of mentors along the way that have been so helpful to me, like in growing as a person, as an investor, as just like in a lot of ways, they've been really helpful.
So if somebody's listening to this and they're thinking, okay, based on my visual standpoint, my place in the market, my business, the way money looks to me, is it a good time to be investing? Is it a bad time to be investing? Is the high-tech startup industry kind of saturated? Are there still plenty of ideas to be pushing around?
Yeah, I think it's a great time to be investing. I think when you look at like 2020, 2021, the tech market was like way overheated. A lot of funds in that market are going to be underwater. Like companies were raising money at way too high valuations relative to revenue. And so you've seen this like massive correction in the tech space since 2022, which I think was like probably a good thing for the market. And AI has some heat on it now. And like some of the valuations you see are a bit head scratcher. But in general, you're seeing this like huge shift of AI is now going to create a lot of opportunities across every industry. There's just more talent available with like all the layoffs and everything. There's more talent available that are more willing to look at startups than they were before. There's like as an investor, like your entry price or valuation you can invest in now at companies is much lower than it was in 2020 or 2021. And the reality is like the macro market is pretty cyclical. So these companies take 7 years to get big. And so the hope is like by the time they're big, they're growing into what is the next bull market. And like maybe exit multiples are a little bit higher then. And so I don't know, I tend to think there's a lot of things that would lead to this being good. And if you look at historical data around the venture capital asset class, like during and after recessions, those funds in that vintage years tend to like historically outperform every other year for a lot of the reasons I just mentioned. So I tend to think it's a good time to be investing in startups. I think, I just think you need to have some like differentiated edge in order to win though.
Yeah. And just saying you have AI doesn't necessarily mean you have that differentiated edge.
No, definitely not.
Yeah. What are some of your favorite companies right now out there in the tech space?
I mean, I'll talk about some of the ones in our portfolio. So one of my angel investment that I made that I said, one of those two, the first two that I made that like started really working, one went all the way up and then kind of back down to basically zero. So that was a humbling experience. The other one is a company called Flexport, which has done very well. They're like a tech-enabled freight forwarder multi-billion-dollar company now. And I think when you look at like the supply chain space, it's a massive space that's very complicated, that is like lagging in technology. And I think Flexport is one, seeing how hard it is to build in that space, but also has had success in scaling quite a bit and still are just scratching the surface on like the market share they have in the market. Wow. Just because it's like supply chain logistics is like $1 trillion plus market. I mean, it's a massive market.
Yeah.
So that's
we work around it.
Yeah. It's amazing when like a lot of people don't really think about it, but like everything moves around the world to get to you. Like it's complicated. There might be like 10 companies that touch something before it goes from like you ordering it online to actually getting to your doorstep.
Yeah.
It's kind of wild when you really think about it.
Quite a complex system of moving products and goods. And we do that in the e-commerce world.
Exactly.
A lot of that is where we move it. It's to echo what you said. We saw the same thing in the e-com investment world on the other side of the house, which when they were buying in that tech space you mentioned earlier, they were overvaluing, overpricing assets in the e-com world. Definitely buying higher on revenues than they were on SDE or earnings because they overpriced them by 40%.
Yeah.
So now the market's kind of right-sized and things are actually looking like opportunities. It's time to buy and time to invest.
Yeah.
What are one or two of the ones you're working on right now that you're super excited about that haven't hit the market yet or on the way out? And you're like, these are my racehorses. These are the ones I put my money.
Yeah. So we have a company top of mind just because they're growing really quickly. And I was just talking to them this weekend, but there's a company called Finney Health, which is building kind of like a business in a box for ABA therapists. So for kids with autism, and there's a mismatch of supply and demand. And so they were going to practitioners who are working at a practice and saying like, hey, we'll help you start your own business and we'll handle everything except for working with your patients. Like we'll do all the like compliance stuff, licensing stuff, reimbursements, like all the software to manage scheduling and automate as much of that, find the patients for you, fill your schedule. You then work with the patients. And they then go to all these states and they get licensed in the states and they find practitioners. And when you talk to the practitioners, I mean, one woman I talked to, when you never get this from like customer reference calls, was like, they literally changed my life. Like I'm making twice as much money as I was working at a different practice. And now I have my own business and they do like a net profit share. So they only make money if the practice and clinic is profitable. Okay. And so it's just, I don't know, I think it's like a fascinating business of like helping. The impact it has on their patients is really good. It's like creating a bunch of new entrepreneurs. And it's in a market where there's like clear tailwinds behind what they're doing. And they're just growing like a weed. Like they're growing really quickly. And that was one that went through our accelerator. We invested in again out of our seed fund. And it's been fun to watch. And they're like relatively young founders, but just super smart, work really hard, and just found an opportunity and like ran with it. And it's been amazing what they've been able to build so far.
So you're kind of qualifying. I was going to ask you, you're kind of qualifying who those people are, but if you're looking for a specific person or attracting a specific person towards you or a type of business towards you, what would it look like? How do they qualify? How do you do your due diligence on them to determine whether or not their investment, worthy? What's your process look like? Yeah,
so a lot of it is because of how early we're investing. A lot of it is evaluating like market and the founder. And what we're looking for in the founders is founder market fit. So I'll give an example of a company, we'll see if we're going to end up investing in them or not. I just talked to them a couple of days ago, but like they are two people who have never started a tech company before, but they've spent 20 years in their career in a very specific, like fairly niche, but like surprisingly big market. And they're like, we just think it can be done better. And we think we can build software to do it. And they walked us through like that market and why they think there's an opportunity and like what the product is they're building and the impact that product can have. And it was, I think that like, that's the sort of thing we look for. Like they had a unique insight. They have a network in that market. They like clearly understand the nuances of that market and who the players are and like where they can disintermediate with software. And so even though they're first time tech founders and haven't scaled a software company before, like they deeply understand their market. And we think that gives them an unfair advantage, both from a distribution and sales standpoint through their network, but also just like understanding the relationships that are happening in that market and how they can build software to help make it more efficient.
So you're looking at really at the end of the day, it's aptitude. and experience in a particular market segment or area in which they might have an unfair advantage in the history of knowing the ins and outs of the market share.
Yes. Yeah.
Yeah. It's smart and it's good. It's investing in people at the end of the day.
Yeah.
Because you can kind of go to the market all you want and the market can change. People can change as well, but you're trying to evaluate obviously a combination of those things, which is smart for those investments. If someone's listening to this and they want to go, hey, I'm a hand raised, I think I might be one of those people. How do they get connected with you?
Yeah, our website is just forumvc.com. We have a pitch us forum on there. You can email me at mike@forumvc.com or anyone on our team. But we're pretty open. We get a lot of inbound and we look at all of it. So happy to have people reach out.
What do you not invest in? What are you not bullish on? What do you not?
Yeah, we don't do it. We don't do anything consumer. We don't do anything that's like heavy hardware. We do a lot of health tech software, but we don't do like therapeutics and like biotech type stuff. So we're all B2B software, B2B marketplaces. For the most part, we'll occasionally do like tech-enabled service businesses if there's like a heavy tech component that can really increase the margins. But yeah, nothing consumer, nothing crypto, nothing deep hardware, and no biotech.
Not in the crypto space, huh?
Nah, I mean, look, I dabble personally, but not out of our funds.
You dabble personally?
Yeah,
okay. And how's the market? Yeah.
Obviously Bitcoin has been up a bunch recently, but I'm not sophisticated at all. I don't pretend to be.
I'm sophisticated at losing money in the crypto market. No, nobody follow my financial advice when it comes to crypto, or I will lose your money. Yeah, who knows what the heck is going on? All I do know is that I wish I still had the 2 Bitcoin that I had when I bought it at 600, and should have just left it alone and put it. That would have been nice. Yeah, it would have been a nice little hold, but oh well. That's how crypto goes for a lot of us. Doesn't it? We think it's going to be up. So if I could invite you to meet with somebody or put you on the table in front of somebody, who would be your like ultimate lunch date?
That's a good question. It would probably be someone like one of the early kind of pioneers in the venture space, like a Don Valentine, or even some of the more recent ones like Fred Wilson, like some of the VCs that like really built an enduring kind of platform and brand and had like an amazing track record. More so to learn I mean, obviously I can learn a lot from them on the investing side and would want to, but more just around like, how do you build that like enduring brand and venture and do like transition planning? And I'm way off from that, but like one of my like big goals is to like really try to build a firm and a brand that lasts well beyond my career. And so would love to find someone who has successfully done that and have lunch with them.
Yeah. Is that a legacy thought play for your kids? Are we talking about maybe getting the kids involved at some point?
Yeah, maybe. I wouldn't want them, force them into it. I think it's more of like I just think it would be a proud moment to feel like I like built something that lasts well beyond me. I brought on 2 partners now, so like I don't think it'll be like a family thing where kids come in and stuff. I think it's more just, can we build a platform and a brand that can like persist for decades? And I think it would just be like fun to feel like you were able to do that. And I think it's hard to do. Yeah. So it would feel good to be able to do that.
How do you see yourself building legacy then for your kids, if not involved in the business?
I mean, I think for my kids, I think it's more about like, I just want them to do whatever that makes them happy. And so I think for me, it's just like, the legacy I want to leave with my kids is that I was there like all the time with them and like around and coaching their teams and just like being their like biggest fan and support system for whatever they want to do. And as long as they're like happy and healthy, and I think the legacy I want to leave is just like they rave about, like they think I was an amazing dad who was always there for them, right? Like
dad stays the hero. Yeah. I love it, dude. That's legacy building in my mind. I saw this the other day and tried to summarize it as simple as I could. And I saw this meme the other day and it was literally down to, in the future, what do you want your kids to think about you? You don't want them to remember you weren't available, or dad had one more meeting, or he wasn't that guy that was available. Yeah. And being highly available for my kids is important to me. And it sounds like it's very important to you.
Yes.
And that's a powerful legacy to impart in all of the things we're doing in business, right?
Yes, exactly.
To build right. Yeah, very good, my man. Well, look, I think you built something wonderful. I got some connections for you.
I appreciate
As we've been thinking, I've been writing down names.
Awesome.
I definitely want to make some connections for you. I think it'll be good. And I've just been honored to be on the call with you today. Listen to you, my man. You've done wonderful things, and I'm super excited to see where you're going. So
thank you for having me. I really appreciate it.